Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session, actually closer to a late session update for Wednesday, August 7th, 2024. It's 2:52 p.m. Eastern Time, so I'm starting the video. I just fired off a post. There was a little snag. It didn't go out from the automated system. Luckily, I caught that and sent it out to you. So it actually works better because we're actually a little closer to that, right on really, that 17,996. I'll call it 18,000 support on NQ. You remember, I always say this: the site, isn't really about active trading. That's almost impossible to do. It is impossible to follow an active trader. I've always used the analogy. It'd be like, trying to learn football, and let's say when Brady was playing, or Mahomes, whoever your quarterback is, saying, "Okay, come here, follow me on the field in the game in real time, and do everything I do. Mirror my every step." So there's just not enough time. These are decisions made in milliseconds. But with that being said, when I see an opportunity, I'll get it out to you. And I'm only going to do that when volatility is high and the market is conducive to active trading. Otherwise, 99% of the trade ideas on this site are typical swing and trend trades, long-term trades analysis. But time permitting, when the opportunity is there, I'm going to show you what I'm doing. And anyways, that's the pullback support. So remember, in today's earlier video, we were right here, right at the time, the 50% fib. We had comparable resistance levels on the S&P 500 futures. That's a major Fibonacci retracement. It was also the top of that gap, very significant technical level. As I said, you don't typically get gaps, at least noticeable gaps in the futures, because they trade virtually around the clock and they shut down on Friday and then pick back up Sunday evening. So that's it. So it was an objective entry, and that's also when I pulled that QQQ trade in early, same time there, and we reversed. Then as I was doing the video, we had just cracked this trend line here. I was trying to adjust that, and that's the catalyst for that strong move down. If you take a rising wedge pattern, which this is, you take the widest part, that gives you the measured target. And although this is a little shy of the measured target, it's decent support. Look, we haven't bounced yet, and we may not bounce. So I told you I'm going to give a little room. My stop's a little bit below that reaction low right there. And that's it. And so you got a steep uptrend line. What I want to share with you, too, is, my thought process. Because, again, I've been doing this a long time. What this site is about. I'm teaching the lessons I've learned. Very costly lessons. Trading is a, very costly thing over the years, decades of trading. You learn, a lot of mistakes, and hopefully you don't repeat those mistakes and kind of get the ebb and flow of the market. So what this is, other than the reasons I cited earlier to, reverse back and go short. Again, that was almost an hour-long video the second time around. What this is mostly profit taking. It was definitely a technical catalyst. Everything I talked about earlier was, technically based for reversing and getting back to short, especially going back into those swing shorts. That hasn't changed. This is just active trading stuff. This is all I'm trying to do here. Take a shot here, bounce it back up, get, one more trade, watch, rinse, repeat. There's been a lot of trading ops here, as I mentioned, in the 5 and 15-minute charts recently, and including this one and hopefully this one. But the other thing, what I was going to tell you is what I take into consideration is, the fact that this is most likely profit taking. I don't have, I can pop up, turn on the TV, or if you have, Schwab's Thinkorswim platform, formerly Ameritrade, you have the, I don't know if you know it, there's a pop-up window. You get free CNBC throughout the trading day with no commercials. It's kind of awesome. Pop it up in a window if you have multiple monitors, minimize it, put it as small as you want. What I'm getting at is, I could turn it on. Maybe there was some news somewhere. I haven't seen any big headlines come through on email from any of my sources, but where I'm going with that is today's there's no economic reports. So it's not like we got knocked down on a hot inflation report or, bad tomorrow. Now we have jobless claims tomorrow. I just wanted to point out this was purely a technical move today, most likely profit taking, hence a 3% reversal from high to low without a catalyst other than the technical catalyst to cause that selling. It's just part of the VIX being elevated, and this is where, again, trading opportunities abound. You got to be quick, got to be in and out. But among the many terms I've made up over the years, one of them I call velocity, and velocity is, when trading, if you can, recycle and you get these little moves, 1, 2, 3%. And if you do it, in a week and you get, let's say, 10 of those, 10%, up, down on a market that's gone nowhere but sideways, well, 10% a week, 40% a month, annualize that out, you're doing pretty good. Now, you're not going to bat 1,000, but you get the point. You can just get a few percentage points a week when the market is conducive to active trading, and then recognize when to morph back into more swing trading mode or ignore what you see on the short term, the 5-minute charts. This was all the impulses selling off the highs. Market stabilized, hit key support. We're having that reflexive bounce off the 200-day moving averages. We're holding above the 200 days. So this is what you get. This is buyers, sellers. This is a function of the elevated VIX. Okay, so that's that. And there's a little trend line you can see I drew here that'll, if when popped, that should be the quick catalyst for a quick move up there. We could certainly have more, and if you think we're going to get more, then when you get up to 18,224, start to get close to it, just put a stop in or a trailing stop and let it run. To me, it's kind of in out and then wait for the next objective opportunity, like short there, cover here, sell there, and then kind of reset and see where the chips fall. And big and remember, we got this tomorrow. And this is going to make the markets go one way or the other. I don't know which way. I'm not going to play the guessing game on this one. We're kind of in that period, where I think we're going longer in intermediate term, very near term, where I think we're going in the next hour of trading before the close. I just showed you a little up, close out, go flat in my trading account, and then recycling. If I see something tonight after later on, maybe take a shot, but most likely I'm going to wait till tomorrow to re-engage. Whether I can get my little bounce here or not, that last one for the day, it would be nice to go home flat and sit on some nice profits. Natural gas, nothing's changed there. Still very much like that one. That one I'm going home with, even though yes, we do have, as I pointed out, the EIA gas inventory report. Based on the technical posture of natural gas, I favor whether the report comes in, inventories are higher, above or below expectation, the builds. In other words, the chart's strong enough to warrant keeping a position. And then once this is out of the way, if there's any objective levels to add, unless the charts just fall apart, unless the breakout fails and we go back below that trend line, then I'll look to add objectively to that, be it a pullback or a breakout above resistance. Oh, and speaking of that, boom, T1's hit, by the way, guys. So if you're ETN, ETF trader, T1's been hit now. That's very close there on the futures, not all the way there on the 6-month 2-hour candlestick chart. And then for you active traders, remember we hit T1 right away earlier today, and we're still kind of holding around that level right now. And so either way, still looks good, but also keep in mind, natural gas is very volatile. If you go home with a heavy position, too heavy, you're either going to be very happy or very tomorrow when those inventory builds reports come out. And that's it. Let me just make this one quick since the last one ended up being over 50 minutes. There's that 1800-ish support. There's the reversal. I jumped down to a 5-minute chart now. I was on a 15 earlier. And that's it. So get a little hurrah here into the close, go flat and regroup and see what things are like tomorrow. And like I said, going forward, I'll continue to look for objective levels to scale into longer term short positions, but kind of just keeping it light now. We've got, let's see what happens tomorrow with the economic data, and then we'll kind of go from there. As you know, I've always said unlike some traders who are very rigid on a trading plan, they say, put a trading plan in place, stick with it. That's not me and never has been. I'm kind of always say the charts are dynamic, and so is my analysis, and that's why I pulled the plug on that QQQ trade earlier today right there, and it worked out well. Sidestepped, that 3% pullback and turned it into a plus 3% profit there. And look, maybe we do go up there tomorrow. I don't know. I don't see it in the charts. It can happen. I just don't have strong conviction. So let me get the video out to you guys because there's exactly 1 hour to go left in the trading day, and let you guys decide what to do. This has been Randy Finney with Right Side of the Chart. Have a good one.